Welcome back to the NITE Economics YouTube channel. Today we're going to be looking at, or have a broad view of what's going on in the markets. I know it's been about a week since I posted my last video. I've had a particularly busy week, the last week, but my goal is to post videos regularly, at least a couple times a week, 4 to 5 times per week, ideally every single day, to kind of keep you and myself kind of really on the pulse of what's happening with the markets. So we're going to start with the price of Bitcoin. You can see that Bitcoin had a local, I don't know if a local high, but it had a high this week, and now it's pulled back quite a bit. My long-term target for Bitcoin is to hit this 200 simple moving average on the weekly. It's currently sitting at $59,000, and if things get really bad, even this 377 exponential moving average also on the weekly. But right now we're going to take it one day at a time. As you can see, Bitcoin has been trending up, and it's a very common pattern to see Bitcoin trend up during bear markets and then break down. So you can see that here, and we see that currently as well. So we will see. This is again, this is a target I'm waiting for, and it's likely to hit that, because I think the 4-year cycle is intact. So far, there's no sign to show that it's not intact. So until it's broken, I'm gonna keep assuming that the 4-year cycle are still playing out until proven otherwise. But as of right now, that's kind of what I'm looking at right now is this, like I said, this exponential simple moving average and this exponential moving average, which are 59 and 50,000 bucks respectively. But I think a low would be maybe somewhere in the middle, somewhere in here. So somewhere between 60 and 50,000 bucks is where I'm looking at for Bitcoin to hit its low for the bear market before probably chopping around for a while and living down there for a while, and then starting the new cycle late this year, if not the next year. Now let's take a look at the S&P 500. Like I said in some of my previous videos, I was expecting the S&P 500 to hit the 55 exponential moving average on the weekly, and it did that. I do think this has more downside to go, right? Because we see here the BBWP starting to expand, and I think it's going to expand to the downside. I think it's very likely for this to happen. I mean, it's hard to tell. Yeah, this chart's funny. I guess this is divergence here, right? But yeah, it's not like your typical excuse me, bearish divergence. But I mean, I think this thing's going to continue to expand to the downside. I mean, it's lived in this area, in this really low area, below like 20% for a very long time, since last year, right? Like November. So it's been down here for a while. I think it's time for it to see some action, and unfortunately the action is likely going to be to the downside. So I think it has more downside from here. I think if things get really crazy on the 2-week, the 55 exponential moving average, so 60,000 bucks would be a potential target, and we'll see if it gets any lower than there. If it goes any lower than that, only time will tell. But we're gonna play this one day at a time. Like I said, and like I was saying for a long time in my YouTube channel, if you're watching, that the S&P 500 pretty much topped out. You could see in October, and it just moved. It lived pretty much within 2% of that high. For sure, it came down a bit, then it recovered, and it stayed up there for several months, and pretty much until February, and then it started breaking down in March. In pretty much March. So we'll see. Like I said, I think there's more downside to be seen here in the S&P 500. Just the question is, how low will it go? Even if you look here at the monthly, the 21 exponential moving average here, the yellow line is looking like a juicy target. And again, if things get crazier, it could go a little bit lower, but we will see. We will play this one step at a time, especially if we get something like a recession, which it could possibly happen, right? The markets are not looking super good, and even the economy is just not looking that good overall. Wars don't help for that. Markets like stability. Markets generally don't like war, unless you're, I guess, an arms manufacturer, I suppose. And I guess for you it's fantastic, but for most people don't like war. Gold. So gold to me here. It to me, I'm hoping, because I've said in my previous videos that I think gold is not done yet and is gonna go for a higher high or an all-time high at some point later this year. And I'm hoping, if I am to be correct, that this is just a higher low before going up, or maybe just having some sideways action for a while and then breaking out. So we will see for this one. It's not like silver, where I think silver is essentially, you had this high, you had this low, and a closing basis. You have this lower high and now a lower low on the weekly. So I think this one has more downside to go, or at minimum, best case scenario, some sideways action, maybe a little bit of downside for a couple of years, and then breaking out to the upside. Where gold, to me, if you look at it from a closing perspective, to me, it looks just like a higher low, right? So especially here on the monthly, to me, I think this still looks okay. I'm gonna be a little bit biased, right? I mean, if it didn't close this low, it would have looked a little bit better, especially if it closed above this on the monthly. I mean, wait, the monthly's not even closed yet. Sorry, this is the monthly, right? So we need to see where this one closes out this month, right? If it could recover. Where is that close? Let's see. So if it could get back above $5,200 by the end of this month, I mean, I think it should be okay. You know what? Even if it doesn't recover above that, but if it particularly gets above the 5 exponential moving average here on the monthly, I think it should be fine. I think it really should be fine. Even if it doesn't, I don't think it's really done yet at this point. It would have to, for me to say that, okay, this is done, it's likely not going to make that new all-time high at the end of this year. Gold would have to close below this previous low of 4,300, almost 4,400 bucks, and I would say, okay, this guy's going further down, maybe to this 21 exponential moving average. But as of right now, until that happens, I'm going to still stay quite bullish on gold, particularly with what's happening in the world right now, during times of war, during times of uncertainty and doubt. Money goes to safe haven assets, and gold is one of those things. Another safe haven asset is the U.S. Treasuries. So U.S. Treasuries are likely going to be where people are going to park their money for a while, especially during these times. But let's take it one day at a time. I'm still bullish on gold. I mean, right now this candle doesn't look very good. Gold essentially this week had about a 10% downside move, which is quite a large move, but we will see. And the S&P 500 had a smaller move. It had about like a 3% move to the downside, but we will see. So now let's take a quick look here at the S&P 500 priced in gold. As you can see, the S&P 500 has finally, here on the weekly, has finally recovered this 1.45 support resistance level. Right now is resistance, right? But sometimes it's support. When it's above, it's support. When it's below, it is resistance. For me to get bullish on this very non-bullish chart since 2021, essentially late 2021, the S&P 500 will have to start getting above some of these major exponential moving averages, starting with the 21, and particularly getting above this previous high, which is above essentially 1.6, and then ideally above this 1.76. If it could get above that and stay above that for a while, then okay, like maybe it's starting to dig itself out of this hole, and maybe, just maybe, there is no recession that's going to happen. I don't know. I can't tell you with 100% certainty if a recession is going to happen, but it's not looking good, right? You have a couple things against you. You have gold hitting all-time highs, silver hitting all-time highs. You see currently the stock market starting to break down, although it's early still. It hasn't broke down a lot, but it's still early, but it's showing signs that it might want to continue to break down further. And you see energy going up because of the war. Doesn't matter the reason, but the reason doesn't matter. You usually see energy, things like oil go up right before a recession, or many times even during a recession. I've showed that in previous videos. I'm not going to show that now, but you could look back through my video list and you could see that. So right now we have what is that? 3 things out of the 4. The last thing that's missing is unemployment rate to go up exponentially. And the thing that's interesting about the unemployment rate is that since about 2022, it's been trending up. So unemployment rate has been going up, but at a very gradual, steady pace. It hasn't had a big wick, a big exponential move to the upside, a non-linear move to the upside. That is the last component. And if you start seeing something like that, that is usually a red herring. I think that's the expression, a red herring, if a recession is going to happen. And I mean, once a recession is already announced, usually when it's announced, the recession is pretty much come to the end. So everyone will know we're in a recession before the government announces it. So that's an interesting thing, right? So right now, it's not looking good. So back to this chart, for me to get bullish and to essentially be like, oh no, I guess maybe a recession is not going to happen, because if you see some of my videos, most of the recessions happen when the S&P 500 is below this 1.45. Yes, of course, there have a few recessions that have happened above when the S&P 500 is above the 1.45, but the vast majority happen when the S&P 500 is below here. So if it starts living below here for an extended period of time, and it's been down there for several weeks, 1, 2, 3, 4, 5, 6, 7, 8 weeks. That's 2 months. It's been down there for 2 months, and now it's finally closed above that. We'll see. I think it's going to get rejected and drop back down. That's what I think is going to happen, but we will see. Again, this is one that we need to be tracking very, very closely, because it gives us an idea of where the market is headed. But this is mainly, you see this candles because gold had a big downside move this week, right? I think gold will bounce, and then this will not look so good for the S&P 500. But let's give the benefit of the doubt in terms of this chart. But we'll see how things play out. And then lastly, we'll take a look at oil. So you could see here oil pretty much living at the $100 mark essentially for the last 2 weeks more or less. It's still early in this breakout. Kind of get to some crazy numbers. You've been hearing some things like a $300 barrel oil. I don't know if that's gonna happen. I think I heard an analyst say that gold back during the, let me see if I can get rid of this stuff. Back during the, I think it was the Iraq War, the first Gulf War. So I guess it's this one. It was around this time, I believe, when the first Gulf War happened. You guys can correct me in the comments section. Yeah, I don't know. Was this the first Gulf War, or was it in the late 80s? Was it in the 90s or the late? I think it was in the late 90s. I don't know, but essentially, I read. You know what? I'll make a video about this before I jump into this. I'll do some research on it and I'll make a video. But essentially, you could see that, oil was trending down for several years, pretty much since 2022. It's been trending down for several years, and now it's finally starting to break out. So we'll see what happens with that. We'll see if this is just a quick wick, and maybe things in the Middle East will settle down and the price of oil will drop back down. But as of right now, it's high. It's very high, and it made a very sudden, rapid move. It wasn't like a slow trend up like something like this, even though this has had some drastic wicks back here in the mid 2015 time. But yeah, and actually, let's take a quick look at Forex. I'm not very good. Where is it? The Dixie. I hardly ever really look at this chart. I just kind of usually just take a quick browse and to see where the dollar is, the dollar index here, and it's sitting more or less at 100. Usually you don't want a strong dollar. It's usually not good for the global economy because many countries take out debt in US dollars. So the higher that the dollar goes, the more difficult it is for countries to buy the dollars in order to pay back their debt. But this essentially, let me see. Okay, so what was this? A couple of weeks ago, it had a silver cross to the downside. Oh, that's not good. And it got rejected here. So, I mean, it's not that it's good that would essentially be a good thing for the overall economy if the dollar is weaker. So, yeah, so right now, I would say this is looking like it's not going to break out. I think it's going to break to the downside. How low? I don't know. But maybe it'll retest these lows over here for a while before breaking out. If it breaks out, that's not good for the global economy. It's not good. So, yeah, we'll see what happens. We'll see what happens with the dollar. It's very interesting, actually. And pretty much that's all I have for this week. Ignore the titles for my videos are a little bit clickbaity, but that's kind of the game on YouTube. Again, excuse my lack of video content in the last week or so, but now I'm not as busy, so I'll be able to post regular videos, or they normally won't be as long as this video, but I had a lot of things to talk about this week since I didn't post anything this video. If you're liking the content, please subscribe to the channel. It's very useful. Like the video if you like it. If you have any ideas for future videos, let me know. And actually, one quick thing that I forgot to mention is when I talk about recessions, I had a guy make a comment, a very nice guy make a comment on my video saying that we are currently in a recession, but I think it could very, very, very well be correct. I'm just talking about an official government sponsored official announcement by the government saying that we're in a recession. That's what I talk about when we say we're in a recession, and certain things need to be met. If you look at something like shadow stats and the way governments used to measure different statistics, they've changed drastically over the last 30, 40, 50, 60 years in order to make governments look like, oh, things are not as bad because we're looking at it now this way, right? But they don't really announce to you how they're looking at things differently in order to soften the blow to the public. So when I say a recession, I'm talking about like an official government recession. But yeah, and for many people, we're likely already been in a recession for a long time. I think there's a lot of signs pointing that we're probably already in a recession. Again, by the time the government announces a recession, the recession's probably almost over. So only time will tell. We're still looking at some of these different indicators, these different signals across different assets to give us an idea of where the market is going, where it's heading, and where we're currently sitting. Again, if you're liking the content, like, subscribe, drop a comment if you have any ideas. If you disagree with anything that I say, I'm always open for a friendly conversation, and I'll see you guys next time. Take care. Bye.